Hello students, how are you all? I hope you are doing well. In this video, we discuss CA Foundation Accounting Mock Test Paper Series 2 January 2025. Earlier, I have recorded a video on Mock Test Paper Series 1 students. So if you haven't seen that video, first go and watch it. Later on, you can watch this mock series 2. Compared to Mock Test Paper Series 1, in this series, we have some lengthy problems students. Some lengthy problems here we have. MTP1, it contains only few small problems, but here we have some lengthy problems. So observe, this is the difference we need to identify. Next, without wasting much time, we start our discussion of this MTP. To get first one, true or false statements. So true or false statements, you can score minimum to minimum 10 marks out of 12 marks students. If you can get 10 marks out of 12 marks, then there are chances of getting qualifying this paper. Yes or no students? That's why these true or false statements are very important. Now look at, depreciation cannot be provided in case of loss in a financial year. First of all, depreciation is a charge against profit. It is not appropriation of profit. That means irrespective of your profit or loss of the business, it can be provided. So the given statement is false. Next one, at the end of the accounting year, all the nominal accounts of the ledger book are balanced. The ledger book contains personal accounts, real accounts, and nominal accounts. At the end of the year, all nominal accounts are totaled and transferred and closed by transferring to profit and loss account. So they are not balanced generally. So the given statement is false. Next one, any amount spent for replacement of worn out part of a machine is capital expenditure. Generally, replacement of worn out part of a machine is nothing but part of cost of maintenance, cost of fixed asset, maintaining the assets. So it is not capital expenditure, it is revenue expenditure. So the given statement is false. Next one, in case of admission of a partner in a partnership firm, the profit or loss on revaluation account, in case of admission, what we do? The profit or loss on revaluation account is transferred to the old partners in old profit sharing ratio. Yes or no students? Yes. Is transferred to all partners in their new profit sharing ratio? No. Generally, we transfer to the old partners in old profit sharing ratio. The debit notes issued or used to prepare sales returns book. Generally, who issue debit notes? Customers. Customers issue debit notes. So when customers issue debit notes, they use these debit notes for maintaining, for preparing purchase returns book. Yes or no students? So the given statement is false. Debenture suspense account appears on the liability side of the balance sheet of a company. See, when the debentures are issued as a collateral security, generally we have two methods. One, we can record the entry, or else we need not to write the entry. Suppose if you follow this method, that means we are recording entry for issue of debentures as collateral security. Then what is the entry we record? Debenture suspense account debit to debentures account. Debenture suspense account is showing debit balance, so that we take this to the asset side of balance sheet. But here they said liability side of balance sheet. So the given statement is false students. Observe. So while watching this MTP, you can have answers also. Okay. So compare this. Next one. Explain the objective of accounting standard in brief. This you can study students. Next one. One of your client, Mr. Govind, asked you to finalize his account for the year ended 31st March 2024. Okay. As a basis of for audit, Mr. Govind furnished you with the following statement. Fine. Look at Govind capital, credit, correct. Govind drawings. Okay. Go to at the end and see. The closing inventory was 5,166. Fine. Mr. Govind claims that he has recorded every transaction correctly as the trial balance is tallied. Yes. Look at debit total and credit total. Trial balance is tallied. Fine. Check the accuracy of the above trial balance and give reasons for the errors if any. First, we check the trial balance. If it is correct, okay. If it is not correct, we try to rectify it. That means we have to prepare rectified trial balance. Yes or no students? We have to redraft it. First, check whether all balances are given properly or not. Govind capital credit, Govind drawings debit, leasehold premises asset debit, sales credit, Due from customer. Due from customers, asset na debit balance. Make a correction. Next, purchases, debit, purchase return. Purchase return credit, make a correction. Next one. Loan from bank credit, trade expenses debit, trade payable credit, bills payable credit, salaries and wages debit correct, cash at bank debit correct, opening inventory, asset na debit balance. Rent and rates, correct, debit. Sales return shows debit balance, so make a correction. After correcting all these things, you prepare the trial balance and write down the reasons. Yes or no? Now look at what is the reason. I will tell you one reason. Due from customer is asset na. Generally it shows debit balance. That's the reason we have to write. So for all these things, write down the reasons. Here, this is a simple question. Now look at 2A. 2A is a question on valuation of inventory. 2A is a question on valuation of inventory. Observe students, in June 2024 and September 2024, they have given a question from valuation of inventory, the two in question number 5A for 5 marks. Inventory taking only. This question is also on inventory taking. Observe carefully. Sunshine Limited keeps no stock records, but a physical inventory of stock is made at the end of each quarter, and the valuation is taken at cost. That means they are not maintaining proper stock records, but we have two methods of maintaining records of stocks now. One is perpetual inventory system, another one is periodic inventory system. That means here there are no stock records, means there is no perpetual recording system. Here we have periodic inventory system. So each quarter, let us say for example, in the financial year, suppose we have 2023-24 financial year. How many quarters we get? 12 quarters. Look at first quarter, 30th June, 30th September 2nd, 31st December 2nd, next third, 31st March 2024 is the fourth quarter. That means at the end of each quarter, they value the inventory. At what price they are valuing inventory? At cost price. Fine. Next one. The company's year ends on 31st March 2024. Okay. And their accounts have been prepared to that date. Fine. The stock valuation taken on 31st March 2024 was however misleading, and you have been advised to value the closing stock as on 31st March 2024. Means already they have valued inventory, but it is misleading. Maybe it is not correct. That's why they are asking us to value inventory once again. Okay. It is the stock figure as on 31st December 2023. So generally to value stock on 31st March 2024, we have to take the previous stock date. That means stock value date. What is the previous stock value date? 31st December. Fine. And some other information is available. Observe students, it is forward reconciliation. It is called forward reconciliation. So in inventory taking, we have two methods now: forward reconciliation and backward reconciliation. Forward reconciliation means what? As on the balance sheet date, generally it is not possible to value the stock. So before 31st March, we value the stock. From 31st December, so here 31st December, from 31st December to 31st March, we have to value the stock. So during these 3 months, all inflow of stock is added, all outflow of stock deducted. At the same time, if any corrections given, so we have to make certain corrections. Yes or no, students? Yes. Now be careful. Look at the cost of stock on 31st December 2023 as shown by the inventory sheet was 80 lakhs. So this is the base we have to take. Next one. On 31st December, stock sheet showed the following discrepancies. That means as on the 31st December, at the time of valuation of stock, we have seen some discrepancies. Look at first one. A page total of 5,000 had been carried to summary sheet as 6,000. Means whatever the stock they have given, it is overvalued. It is overvalued. Now what we do? We simply reduce the stock. Means 80,000 minus 1,000 rupees. Simple. 1,000 rupees extra we have, excess valuation, deduct that. Simple. The total of a page had been undercast by 200. One page is undercast by 200, means undervaluation of stock. Now you try to increase the value of stock. Over. These are the corrections of students. Next 2 points are very, very important. Look at invoice of purchases entered in purchases book during quarter. During quarter means from 31st December to 31st March. Invoices means bills, purchase bills, outward invoices. Outward invoices are entered during the quarter from January to March, totaled 70,000 rupees. Okay, on record. Out of these, 3,000 related to goods received prior to 31st December 2023. Means before 31st December, already we have physically received the goods, but invoice is not received. When this invoice is received by the company business during January to March quarter. But if you observe, as on 31st December, whatever the stock we valued, that stock contains already this 3,000 rupees. Na? Whatever the stock we have valued on 31st December, that contains this 3,000 rupees stock. Yes. Again, they have entered invoices means, it means overvaluation of stock. That's why from the invoices entered, first what we do, we deduct 3,000 rupees stock. We deduct 3,000 rupees stock. Why we are deducting? Tell me, students. Why? Because already this 3,000 physical stock, whatever we received before 31st December, that is added in the above stock 80,000. 80,000. But invoice is not entered. Next one. Invoices entered in April 2021. April 2024. Sorry. April 2024 means next year. Related to goods received in March 2024 totaled 4,000. What is the meaning of this? Before 31st March, we received goods 4,000 physically. That means as on today, as on 31st March, we have physical stock. But relating to these goods, invoice received in next month, April 2024. Anyway, we received on 31st March goods now. So we value these goods in the inventory. Invoice is entered in the next financial year. So what about here? Total 71,000 rupees is inflow of goods. So this 71,000 rupees we simply add. Is it clear, students? Important calculation here. Next one. Sales. Sales means outflow of goods. Sales invoiced. Invoiced means whenever we sell goods, we issue invoice to the customers. Outward invoice. Purchase means inward invoice. So we entered outward invoices, bills on record. Two customers totaled 90,000 rupees. How much? 90,000 rupees bills we have entered. 90,000 rupees bills we have entered in the books. Okay. From which period? January to March. Of these 5,000 related to goods dispatched before 31st December itself. Before 31st December, physically we dispatched goods. That means as on 31st December, we don't have those goods now, but invoice entered in January to March. So that what we do is we deduct 5,000 rupees. Is it clear, students? Observe. Is it clear, students? Why? Because already these 5,000 worth of goods have been dispatched before 31st December, but invoices not entered. That's why we are deducting now. And goods dispatched to customers before 31st March but invoiced in April totaled 4,000. Means before 31st March we have sent 4,000 worth of goods. So physical stock gone, outflow, but invoice entered in April. So during 31st, during January to March, we sold goods. Dispatched means we sold, but invoice entered in April, next financial year. So this 4,000 rupees worth of sales we consider for the sales of current year 23-24. So this is outflow now at 4,000 rupees. So what is the total here? 9,000, sorry, 90,000 minus 5,000 plus 4,000. Total 89,000. This 89,000 is what? Sale value. This consists of profit, cost plus profit. From this first we have to deduct profit. Okay. Now look at during the final quarter, credit notes at invoiced value 1,000 had been issued to customers in respect of goods. Okay. Look at profit percentage here. Yeah. The gross margin earned by business company is 25% on cost. When 25% of cost is given, but here we have selling value. So convert 25% of cost to sales. So 25% of cost means 1 by 4 of cost. That is equal to 1 by 4 of sales. So 80 5,000, 89,000 minus 20%. So we get 71,200 students. 71,200 minus. Simple logic. Observe here. Yeah, is a problem. 71,200. Next, last transaction. Observe carefully. Observe this. During the final quarter, means January to March. Credit notes at invoice. Credit notes means sales returns. Okay. Of rupees 1,000 had been issued to customers in respect of goods returned by them. 1,000 rupees. So sales returns. So sales returns means we get our stock back. So that must be added to stock. So 1,000 rupees minus 1,000 rupees sales returns is at what price? Sale price. So minus profit 200. So cost 800. Add 800 rupees. So do it. You get your answer. Check it. Clear? 200 add 71 add 800 add. So finally you get stock value 79,800. This is shown on the credit side of trading account, at the same time asset side of balance sheet. Next, students, very important question, very important question. Next, BRS, bank reconciliation statement. Observe. Prepare a bank reconciliation statement for Ramesh Traders as on 31st March 2024. Here 31st March 2024 is given. So you can prepare normal BRS, that means all the causes for the difference between cash book balance and passbook balance. We take it to the BRS, bank reconciliation statement, or else we prepare amended cash book. First we prepare amended cash book, after that the remaining causes can be taken to the BRS. So it is up to you, students, but whatever the assumption you take, you have to mention in the answer properly. Clear? Now look at the cash book of Ramesh Traders showed a debit balance of 8,24,000. Debit balance means favorable balance. This is which book, students? Cash book. That means which book balance you should identify? Passbook balance. Now think from passbook point of view. Each transaction think from passbook point of view. At bank 31st March 2024, but you find that it does not agree with the balance as per passbook. Fine. After checking, you find the following. If you observe how many reasons they have given, look at 13 reasons, 13 causes. Look at one by one. So if you solve this BRS question now, almost the BRS concept is completed. Observe. On 12th March 2024, the payment side of cash book was under cashed by 24,000. Payment side means payments. When payments are shown less, cash book balance shows more. But whereas passbook balance less. So 24,000 you simply deduct. 24,000 simply deduct. Next one. A check of 1,70,000 issued on 20th March. We have issued a check. Was not taken in the bank column. Means not entered in the cash book. But you issued na. So automatically amount reduces from bank account. So this 1,70,000 also deducted. Next one. Here you can observe, students. Here we have answer. You can observe one by one. One by one you can observe. 24,000 minus and 1,70,000 minus. Next one, look at on 22nd March 24, the debit balance of 37,000. Suppose this is our cash book. Debit side we should write 37,000. But instead of showing debit side 37,000 rupees, you have shown on the credit side 37,000 rupees. Means your cash book balance is showing less compared to passbook balance. Yes or no? How much it is shown? So by double amount, 74,000, because to cancel 37,000, one time we have to write 37,000 and second time we have to write 37,000. Total how much balance it shows less? 74,000. So it is added. It is cash book mistake na, so it is added simply. Look at 74,000. Next one. Out of the total checks amounting to 84,000 issued, we have issued check. So cash book balance gets decreases. In the last week of March 2024, checks aggregating 57,000 were encashed in March 2024. Means total we issued 84,000 minus, but encashed only 57,000. Encashed means check presented and taken cash. 27,000 worth of checks not encashed means cash book balance decreases but passbook balance increases plus 27,000. Important. Next one. Dividend of 70,000 collected by the bank means bank balance increases plus. Next, fire insurance premium of 40,000 paid by it were not recorded in the cash book means simply 40,000 rupees minus because bank balance gets decreased na. Next, one check issued to a creditor 2,58,000. We issued a check, cash book balance decrease was recorded twice in the cash book. It's a cash book error. Recorded twice in the cash book. So simply what we do, add 1,258,000. Why? Because cash book balance decreases na, but passbook balance increases. Next one. A debtor, Mr. Sahit, has deposited the check for 64,000 into the bank directly in the month of March 2024. Here two possibilities, students. One, if check is honored, then passbook balance increases, cash book balance not recorded now, so decreases. So that simply 64,000 we add. Suppose if the check is dishonored, the check is dishonored. Here, without knowing to us, he deposited check. That means no entry in cash book. Check dishonored. So bank also did not write any entry. So because of this seventh transaction, seventh cause, there is no effect on passbook balance and cash book balance. But observe whether this check is honored, that means collected or not collected. Without intimating to Ramesh traders, and the same check was dishonored. Dishonored means not collected by the bank due to insufficient funds in the month of March itself. Means because of this, there is no effect on our cash book balance and passbook balance. Simply this is ignored. Simply ignore it. Next one. A check from customer for 10,000 rupees was deposited in bank on 28th March 2024 but was dishonored and advice received from bank on 3rd April. A check from customer, that means we deposited a check, but it is when we deposit check cash book balance increases na, but it is dishonored, so passbook balance gets decreased minus 10,000. Clear, students? Next one, bank paid credit card bill 5,000 which is not recorded in cash book, so simply 5,000 rupees you reduce because bank balance reduces na. Next, bank wrongly credited check of 50,000 of other customer in our account, whether it is by mistake or not, but our bank balance increases, so simply add 50,000 rupees. Next, bank credited check of 4,000 in savings account of proprietor of Ramesh Traders instead of crediting check in current account of Ramesh Traders. Important, students. Actually, I have deposited a check. Actually, I have deposited a check in current account. Current account means business account. But bank by mistake entered in Ramesh savings account. Means as per our cash book balance increases na, but passbook current account balance not increased. So simply minus 4,000. Next one, 1,000 discount received wrongly entered in bank column in cash book. 1,000 discount received. Discount received means we enter on the credit side of discount received column. But by mistake, in which column they have entered bank column. So automatically cash book balance decreases, but passbook is. Is it clear, students? Next and last one. Bank debited charges 400 on 25th March. Bank charges na, so bank balance automatically gets decreased. Simple. Like this, you try to solve the problem. Finally, you get this answer. Check plus and minuses so that you can record it. Is it clear? So total passbook balance is 10 lakh 51. If you want to do amended cash book, you can do it. No problem at all. Next, look at third question. Third question is on NPO, students. Observe in June 2024 and September 2024, we have got a question from NPO, same place 3A, and September 24 3B. Sorry, yeah, 3B. Is it clear, students? Look at summary of receipts and payments of Nature Beauty Society for the year ended 31st March 2024 are as follows. They have given receipts and payments account and additional information. Now what you have to prepare? Look at. You are required to prepare income and expenditure account for the year ended 31st March and balance sheet also. First, do one thing. Prepare income and expenditure account and balance sheet format. Prepare income and expenditure account and balance sheet format. After drawing all the formats, now read the problem first, identify the adjustments, and write down the items as it is. So, uh, in the appropriate place. Look at subscription received. Do one thing, for subscription received, always prepare adjustments. That means account. Simple. Now look at subscription received. It is better to prepare subscription received account. Clear, students? Now look at first subscription received 5 lakhs means credit. 5 lakhs credit. Yes. Next one. Donation raised for meeting revenue expenditure means directly you can take it to the income and expenditure account credit side. Income and expenditure account credit side donation. Next one. Interest on investment 9% per annum. Income na, so credit. Next one. Charity show collection receipt, so income 1,25,000. Observe, students. Next one. Payment for medicine supply. Payment for medicine supply, wait. Next one. Honorarium to doctor expense, so debit. Next one. Salaries expense, debit. Next one. Charity show expenses. We received receipts now 1,25,000 minus expenses 10,000. So net amount 1,15,000 as net proceeds from charity show 1,10,000 rupees. Next one. Equipment purchased. This is asset. Show it in the balance sheet. Next, charity show expenses. Sorry, this is sundry expenses. No, this is my mistake. Sundry expenses, debit. Sundry expenses, debit. Next, charity show expenses 15,000 deduct from 1,25,000. 1,25,000 minus 15, 1,10,000 rupees. Clear? Next one. So here, what are the pending amounts? Observe. Pending amounts. Pending amounts are payment of medicine supply and equipment purchased. Except this, remaining all amounts considered. Observe, students. Yes. Wait. Now look at additional information. Additional information. Now here capital. Yeah, capital fund also given. No problem. Fine. Here subscription due. Opening 15,000, closing 22,000. So first write down closing balance in the closing balance sheet asset side 22,000. Outstanding subscription. Now the same becomes credit side 22,000. Current year outstanding. Previous year outstanding write down on the debit side of subscription account. Is it clear, student? What is the opening entry for this? Subscription account debit to outstanding subscription account. That's why we are writing this entry. Next one. Subscription received in advance. Opening 12, closing 7,000. Do one thing. 7,000 rupees first show it on the liability side of balance sheet. 7,000. Fine. Next one. Same 7,000 rupees again we show on the credit side of subscription received account. What's the entry we record for this? Subscription account debit to subscription received in advance account 7,000. Simple. Next one. Now come to opening balance, students. Opening balance. For this, what is the opening adjustment entry we record? Previous year. That means before this date, 31st March 2023. What is the entry we have been recorded? Subscription account debit to subscription received in advance. Current year, the same entry becomes reverse. Means subscription received in advance account debit to subscription account 12,000 rupees. These two are very important, students. Previous year adjustments. Now simply balance subscription account. This is very simple, students. 12,000 plus 5 lakhs plus 22,000 minus 15,000 minus 7,000. So 5 lakh 12,000 rupees relating to current year. 5 lakh 12,000 rupees. Just a minute. Look at students, 5 lakhs 12,000 rupees. 5 lakh 12,000 rupees is the subscription received to be transferred to the income and expense account. Important working note this problem. Next one. Observe here, 5 lakh 12,000. They have prepared a statement, student. Statement. Here you can prepare, no problem, account also. Not an issue. Next one. Stock of medicine 1 lakh opening, closing 1 lakh 50. Observe here. Stock of medicine opening balance 1 lakh. Whereas closing balance is 1 lakh 50. This closing balance, show it on the asset side of balance sheet. Simple. Wait. Amount due for medicine supply. Prepare this account also. What is the amount due here? 90,000 credit. Amount due na closing balance. 1 lakh 30, sorry, 90,000 opening balance and 1 lakh 30 closing balance. 1 lakh 30, whatever the closing balance we have, show it on the liability side of balance sheet. Clear? Next. Now observe how much amount paid for medicine supply, 3 lakhs. Payment means credit side. Here these two are very important, students. These two are interlinked. Now here you can observe total 4 lakh 30. 4 lakh 30 minus 90,000. So that 3 lakh 40,000. 3 lakh 40,000. This 3 lakh 40,000 is transferred to debit side. Means total 4 lakh 40. 4 lakh 40 minus 1 lakh 50. That means 2 lakh 90,000 worth of stock of medicine be consumed. This is shown as an expense. This is shown as an expense in the organization. This is important calculation. That's it. Next one. Value of equipment opening, closing. So it 3 lakhs rupees closing. Observe here. Opening how much we have? 2 lakh 10 plus during the current year how much purchased? 1 lakh 50. 2 lakh 10 opening plus 1 lakh 50 during the year purchased, but 3 lakh 60 total. But whereas at the end of the year how much you have? 3 lakhs, means 60,000 is depreciation on equipment. Yes or no, students? So 60,000 depreciation on equipment. Next one. Building opening 5 lakhs, closing 4 lakh 80. Building opening 5 lakhs, closing 4 lakh 80, means 20,000 depreciated. 20,000. So these things you have to observe. Next one. Cash balance opening 80, closing 90,000. 90,000 like asset side of balance sheet. Simple. Next one. Opening balance of capital fund. Take it to the balance sheet, liability side. That's it, students. Completed. Observe. Now simply balance income and expenditure account. The difference is excess of expenditure over income is deficit. Excess of income over expenditure is surplus. Here we have surplus now. Take this surplus to the capital fund. Now balance the total. Simple, students. Yes, see the observations. In this problem, subscription and these two working notes are very important. Is it clear? Right. Next look at 3B. 3B. A, B and C shared profits and losses in the ratio of 5:3:2. 5:3:2. They took out a joint life policy in 2020 for 50,000. Okay, joint life policy, students. So we have two types of policies now, joint life and separate. A premium of 3,000 being paid annually on 10th June. 10th June we pay. The surrender value of the policy on 31st December of various years was as follows. See, generally in the year of payment, first premium payment nil, 21, 22, 23. Fine. A retired on 15th April 2024 and the policy was surrendered. See, in case of retirement, generally what we do, we surrender the policy. But in case of death, we get the full policy amount. But here what is the case? A retired. You are required to prepare joint life policy account from 20 to 24, assuming the policy. See, we have three methods of treating the premium paid on life insurance policies of partners, whether it is joint life policy or separate life policy. First one, the premium paid is treated as expenditure and that expenditure is transferred to the P&L account. whenever we receive the premium amount that is shared among partners. Second, whenever we pay premium, that premium is treated as an asset. Premium paid is treated as an asset. So JLP account is created. Now, this JLP account, see, premium paid minus surrender value. Premium paid minus surrender value means joint life policy they are treating as an asset na. So this asset they are showing in the balance sheet at surrender value. The difference between premium paid and surrender value is treated as loss again, and that loss is transferred to the P&L account. Third method, when JLP is maintained, along with JLP we also maintain JLP reserve. But here what they are maintaining, they are following surrender value basis. That means first you prepare joint life policy account. What is the entry for payment of policy on 10th June? Joint life policy account debit to bank account. How much, students? 3000 rupees. At the end of 2020, balance this account. The surrender value is nil. So total amount is transferred to the profit and loss account. This is 2020. Now come to 2021. Again we pay joint life policy 3000 rupees. Yes or no, students? Yes. At the end of 2021, the premium has surrender value of 900, means premium paid 3000, 900 is the surrender value. So total loss is 2,2100. That is transferred to P&L account. Next one, 22. Okay, this 9000 is carried 2022. Again we pay premium of 3000. But when you surrender policy in 2022, how much amount you get? 2000 rupees. Debit minus credit. How much? 1900 is the loss. These amounts we transfer to P&L account. Next year, 2023. How much amount we have? 900. Again 2023 we pay 3000 rupees. Okay. Surrender value is how much? 3600. What is the loss here? 1400. Yes or no, students? Yeah. So for the year 2024, what is the surrender value here? 3600. Now A retired on 15th April. That means you need not to pay any premium in the year 2024 because premium due date is 10th June. But he retired on 15th April. So in 2024, you need not to pay anything. Now assume this policy is surrendered. How much amount you get? 3600. When we maintain joint life policy account based on surrender value, what we do in the JLP account, if you have any balance, that balance is treated as profit and that profit is shared among partners. But here we are maintaining JLP at surrender value and also we received surrender value. Here there is no profit on JLP. That's why generally here no need to distribute anything to the partners. This is JLP account. That's it. Very simple, students. You can score easily 5 marks. If you get this type of problem, you can score easily 5 marks. Observe carefully. Only thing you have to prepare joint life policy account. So here clerical work is more. Next one. 3C. Mr. Nikhil gives the following particulars in respect of business carried on by him. Fine. Capital invested 9 lakhs. Market rate of interest on investment and rate of risk return on capital invested in business. What is the meaning of this? Suppose without investing this same 9 lakhs rupee, if I invest in the market, so I will get easily 8% 8% return without any risk. But this 9 lakh rupee now I am investing in the business, so that I have to earn more than 8% now. Minimum to minimum I have to earn more than 8% rupees. So for taking this risk, how much return I have to earn extra? 3%. So total what is the rate of return I have to earn? Minimum to minimum 11%. Minimum to minimum I have to earn 11%. Next, remuneration per annum from alternative employment of proprietor if he was not engaged in business, means opportunity cost. Suppose I am investing my whole time in the business. Yes or no? So if I invest the same time outside my business without starting the business, if I go for employment, how much amount I can earn? 36,000 rupees. Means out of my profits, first what I have to do, I have to deduct 36,000 rupees. remaining amount earned from business. Because if I do job, I can earn anyway 36,000 now. If I earn more than 36,000 rupees, then that extra amount is only my profit. To remember. Next one. The business earned profits of 2,40,000, 2,16,000 and 3 lakhs in the years 20, 21, 23. Fine. Respectively, but made a loss of 36,000 in the year 22. Fine. Compute the value of goodwill. Yeah, is valuation of goodwill, students. So for valuation of goodwill, we have three methods, no? Four methods, whatever you call. One is average profit method. Next one is super profit method. Next one is annuity method. Next one is capitalization of profits method. Is it clear? So value of goodwill on the basis of 6 years purchase of super profit of the business calculated on the basis of average profit of last 4 years. So here they are asking super profit method means first step goodwill. First, what is the formula for goodwill under this method, students? Goodwill is equal to super profit into number of years of purchase. Now, calculate super profit. How super profit is calculated? Simple. Average profit minus normal profit. Average profit means your business profit. Average profit means your business profit. Normal profit means normally in each industry we earn normal profit. That means I have invested 9 lakh rupee in the business. On that, generally how much percentage I have to earn? 11%. That is my normal profit. Is it clear, students? Yes. So first we try to calculate average profit, after that normal profit. The difference between average profit and normal profit is nothing but super profit, and super profit is multiplied with number of years. This is the problem, student. Now look at, first calculate average profit. Nothing but first calculate total profit. Total profit. Simple. 2 lakh 40 plus 2 lakh 16 plus 3 lakhs minus 1 year we have a loss 36,000. Total 7 lakh 20,000, students. 7 lakh 20,000 divided by how many years? 4 years. Minus 4 divided by 4 divided by 4. So 1 lakh 80,000. 1 lakh 80,000 minus, from this I have to deduct my opportunity cost of 36,000 rupees. If I engage in any business, sorry, in any employment, I can earn 36,000 rupees as my salary. So what is the average profit? 1 lakh 44,000 rupees. Observe here. Just a minute. This is total profit. Average profit 7 lakh 20 divided by 4. 1 lakh 80. 1 lakh 80 minus what we are doing? We are deducting that remuneration, normal profit. Okay. So 1 lakh 20, 1 lakh 80,000 is our average profit. Just a minute. All correction. This is our average profit, student. Now, normal profit, how do we calculate? Simple. Look at first. This is our total profit. Total profit. Now, normal profit, how do we calculate? On 9 lakhs, simply calculate 11%, 99,000. Remuneration for the proprietor, 36,000 rupees. And remaining is nothing but normal profit. This much of normal profit I have to earn. On 9 lakh, I have to earn 11% plus my alternative employment. From my alternative employment, I am earning 36,000. This is called normal profit. So from 1 lakh 80,000, deduct 1 lakh 35,000. So how much you get? 45,000 rupees super profit. And this super profit is multiplied with 6. So that 2 lakh 70,000. This is goodwill valuation, student. Super profit method. Next one. 4A. Look at question number 4, students. The balance sheet of partnership firm Mrs. Dutch and Associates consisted of two partners P and Q who were sharing profits and losses in the ratio of 5:3. Okay. The position as on 31st March 2024 was as follows. Fine. P capital, Q capital, P&L account balance, trade creditors, land and building, plant and machinery, furniture, stock, debtors, bank. Fine. On the above date, R was admitted as a partner on the following terms. It is admission of partner, na students. In case of admission of partner, we have to do certain adjustments. Na. First one, calculate new profit sharing ratio. After that, goodwill adjustment. After that, revaluation of assets and liabilities. After that, distribution of general reserve and other P&L account balance or loss, profits or losses, and capital adjustment. Now, R brought 2,40,000. Sorry, R should get 1/5 share of profits. So R will get 1/5 share of profit. Means remaining 4/5 profit, who will take? Remaining partners. Fine. R brought 2,40,000 as his capital and 32,000 for his share of goodwill. That means he is bringing 2,40,000 capital plus 32,000 goodwill. Plant and machinery would be depreciated by 15% and land building would be appreciated by 40%. Simple. Next, a provision for doubtful debts to be created at 5% on sundry debtors. Fine. An unrecorded liability of 6,000 for repairs to building would be recorded in the books of accounts. Fine. Immediately after R's admission, goodwill brought by him would be adjusted among old partners. Anyway, we do this adjustment. Thereafter, the capital accounts of old partners would be adjusted through the current accounts of partners in such a manner that the capital accounts of all the partners would be in their profit sharing ratio. This is very, very important adjustment, student. This is nothing but capital adjustment. This is nothing but capital adjustment. Prepare revaluation account, capital accounts of partners, new profit sharing ratio and balance sheet of the firm after the admission of R. Observe, students. Here, first prepare revaluation account, capital account and balance sheet of the firm. Next, R admission. Okay, he admitted. Fine. Now, when you get this type of problem in the exam, try to solve like this. Simple. First one. We have drawn all the formats now. Revaluation account, partners capital account and balance sheet. Now look at first P capital, Q capital. Show it in the balance sheet. Show it in the balance sheet as opening balances. Over. Next one. Profit and loss account balance. Distribute among partners. Entry. Profit and loss account debit to partners capital account. 1,12,000 rupees is distributed in 5:3 ratio. Okay, distribute 1,12,000 into 5 by 8, 70,000 and 42,000. Next one, trade creditors. There is no change in the trade creditors now. So show trade creditors as it is in the balance sheet. 54,800 as it is. Next, come to asset side. So land and building, plant and machinery, furniture, stock, debtors, cash at bank. Bank account we open separately. Bank account we open separately. Here I will open bank account. Observe here. You people better to open bank account, student. So bank balance how much? 42,060. 42,060. Next one. Write down all the assets. Land and building 3,80,000. Inner column first. Plant and machinery 170. Furniture, debtors, stock, furniture. If there is no change in the any asset balance, then write down that asset amount directly. You get furniture, stock. There is no change. So furniture, stock. Remaining assets we have change. That's why first write down the amounts in inner column. For this you have to mark which assets has been changed and which asset not changed. Now next step. After completing the balance sheet, go to the next step. R will get 1/5 profit. Here calculate new profit sharing ratio. How? R will get 1/5 now. Let the total share be 1. Let the total share be 1 minus how much R is getting? 1 by 5. What is the remaining share? 4 by 5. This is taken by whom? A. In which ratio A and B? Both will take A and B. How A and B will take? In their old profit sharing ratio. So A will get out of 4 by 5, A will get 5 by 8. Out of 4 by 5, B will get 3 by 8. You get 20 by 40. 12 by 40. 20 is to 12. Here 1 by 5. See 1 by 5. To equal denominator multiply 8 by 8. So 8 by 40. So what's the new profit sharing ratio? 20 is to 12 is to 8. Means 5 is to 3 is to 2. This is a new profit sharing ratio. They said calculate new profit sharing ratio. Now calculate sacrificing ratio. Sacrificing ratio formula old ratio minus new ratio. If you calculate old ratio minus new ratio, you get same 5 is to 3 students. Get same 5 is to 3. You can calculate simply. Now look at. Now goodwill, whatever the goodwill he brought, this is shared between P and Q in 5 is to 3 ratio. For this, what is the adjustment entry we record? R capital account debit to P capital account to Q capital account. How much? 32,000 into 5 by 8. 20,000. So 20,000 and 12,000. Observe. Yes. R capital account debit to P capital to Q capital. Here 20, 12. Is it clear, students? Now, how much amount are bringing 2,40,000 plus 32? Total 2,72,000. For this, what is the entry we record? Bank account debit to R capital 2,72,000. So bank balance increased by how much? 2,72,000. Is it clear, students? Next one. Yeah, plant and machinery would be depreciated by 15%, revaluation debit. Land and building appreciated by 40%, revaluation credit. Now this depreciation and appreciation show in the balance sheet also. Simple. Next one. Provision for doubtful debts is to be created. Again, decrease in the value of asset. Revaluation account debit 5%. Balance sheet from sundry debtors deduct this 5%. Unrecorded liabilities 6,000 rupees for repairs of building. So revaluation account debit 6,000. Again, show it in the on the liability side of balance sheet 6,000. Next one. That's it. All adjustments have been completed except capital adjustment. Before that, calculate revaluation profit or loss. Distribute to partners. Over. After that, come to partners capital account. Here we need to adjust capitals. For that, first calculate what is total capital. Observe here total capital of the firm can be calculated based on R capital, students. So R brought 2,40,000 rupees for how much share? 1 by 5 share. R brought 2,40,000 rupees capital for 1 by 5 share. 1 by 5 share. Now observe what is the full share? Full share 2,40,000 into 5. 12 lakhs. This is the total capital. This capital must be in accordance to 5:3:2 ratio. Means 12 lakhs into 5 by 10. 6 lakhs. 12 lakhs into 3 by 10. 3 lakh 60 and 2 lakh 40. Now calculate excess capitals or short capitals. Calculate excess capital or short capital, and excess capital or short capital can be adjusted through current accounts. Is it clear? Now this current account balance and capital account balance show it on the liability side of balance sheet. Observe. If current account is showing debit balance, liability side, asset side. If it is showing credit balance, liabilities side. Clear, students? Now balance sheet total. This is our admission of partner. Hope you understood. Next one. 4B. Samir distributors are carrying on the retail business of electrical goods. Okay. They keep their books of account under single entry system. Incomplete records, students. The balance sheet as on 31st March 2023 was as follows. Observe. Capital, trade, creditors, salary, payable. Motor vehicle, furniture, stock in trade, trade debtors, 6% investments, cash in hand and at bank. Together 20,67,600. Next. The summary of cash and bank book for the year ended 31st March 2024 was given below. So they have already given summary of cash book. Look at opening balance, cash sales, receipts from trade debtors, interest on investment. Fine. Cash purchase, payment to creditors, salaries, rent and taxes, sundry expenses, drawings, closing balance of cash. Additional information, look at gross profit ratio 12.5% of sales and maintained throughout the year. Fine. During the year, discount allowed to trade debtors was 1,87,500 and discount received from creditors 1,05,000. Fine. As on 31st March 2024, the closing balance to trade creditors and trade debtors and creditors 661,500 and 316,800. Fine. On 31st March 2024, an amount of 44,400 outstanding towards salary. Here, if you observe, when you are solving incomplete records problem now, so every information is useful for us. Each information is useful for us, and each information is recorded in two places. Most of the information is recorded in two places, students, to remember. Depreciation at 10% per annum to be charged on motor vehicle and furniture. Depreciation at 10% per annum to be charged on motor vehicle and furniture. Okay. You are required to prepare trading and profit and loss account for the year ended 31st March 2024 and a balance sheet on that date. Here, first prepare trading account format. After that, a P&L account format. After that, balance sheet format. Now, apart from that, prepare creditors account and debtors account. Debtors account. Clear, students? Yes. Now, start problem from the beginning. First one, we have capital. First one, we have capital. Capital, show it on the liability side of balance sheet. So, you have to follow one order, student. You follow one order now, then you can complete the problem. Next one, trade creditors. Creditor account we have opened now, so opening balance 225,600. Next one, sundry salary payable. This salary we pay during the year now, so we deduct from salary. Yeah, here they have given salary to be charged, so salary is deducted 27,000. Next one, so liability side completed. Now come to asset side. Motor vehicle 3,30,000 rupees. Now observe, is there any motor vehicle purchased during the year? No. Sold during the year? No. Depreciation? Yes. On the 10% motor vehicle depreciation, 3 lakhs into 10%, 30,000. Show it on the debit side of P&L account. Debit side of P&L account. Look at depreciation. Just a minute. So motor vehicle is 3,30,000 and furniture is 2,20,500. On that you calculate 10% depreciation, student. So that depreciation is transferred to P&L account 33,000 and 22,050. Now after deduction of depreciation, show the remaining amounts of motor vehicle and furniture in the balance sheet. Over. Next one, stock in trade. This is opening stock. Show it on the debit side of trading account. Opening stock. Over. Next one, trade debtors. Debtors account opening balance. Okay. Next one, 6% investments. Look at whether any investments are sold or not. If any investments are not sold or purchased, show the same investments amount in the balance sheet. Is it clear? So with cash and bank account, already this balance is shown in the cash book receipt side. Over. With this, the existing balance sheet is completed. With this, the existing balance sheet gets completed. Next, cash sales. Cash sales, trading account to credit side. Cash sales, trading account to credit side. Sales consist of cash plus credit. Next one, payment to trade creditors. So trade creditors account debit side. Trade creditors account debit side, students. Observe. Over. Next one. Uh, yeah. Just a minute. Just a minute. Cash sales completed. Okay. Receipt from trade debtors. Receipts from trade debtors. First we see trade debtors. Na? Fine. Trade debtors. So debtors account credit side. Over. Next one. Interest on investment. Interest on investment is income. Na? Here you have investments 1,80,000 and 6%. Calculate 1 year interest on investment. So 1,80,000 into 6%. 10,800. So we also received 10,800. We also received 10,800. So P&L account credit side 10,800. Over. Next one. Come to credit side. Credit purchases. Sorry, cash purchases. So trading account debit. Cash purchases. Next one. Creditors. Payment to creditors. Creditors account to debit side. Next one. Salaries. Expense. Na? So here we have adjustment. Total salaries paid this much. Out of them, previous year salary 27, remaining salary 12,11,400. Wait. Next one. Rent and taxes. No adjustment. So that go to P&L account debit side. Rent and taxes same amount. Next one. Sundry expenses P&L account debit. No adjustment. Na? Next. Drawings. Deduct from capital. So drawings. Deduct from capital. 7,20,000. Next one. Closing balance of bank. Show it on the asset side of balance sheet. Show it on the assets side of balance sheet. 5,13,900. Over. Next one. Additional information. Look at gross profit ratio. They have said 12.5% on sales is maintained throughout the year. See, first we calculate total sales. Total sales nothing but cash sales plus credit sales. Total 12.5% is the gross profit ratio. Fine. During the year, discount allowed to trade debtors was 1,87,500. First, write down this in the trade debtors account debit side, sorry, credit side, and profit and loss account debit side. Discount allowed. Next one. Next one. Trade discount received. First, creditors account debit side, creditors account debit side. At the same time, P&L account credit. P&L account credit. Observe students. This is how we have to solve the problem. P&L account credit. Two places. Next one. The closing balances of trade debtors and creditors. Closing balances they have given. First, closing balances show in the working notes. After that, in the balance sheet. Okay. Next one. On 31st March 2024, an amount of 44,400 was outstanding towards salary. Still outstanding. So show it on the liability side, students. First, liability side 44,400. Next, adjustment. Add. So total salary. Show it on the debit side of P&L account. Next one, depreciation completed. So each information we have taken. Now, first close one by one account. Salary working note is completed. Now come to trade debtors account. Debit minus credit. Closing balance also written. The difference is nothing but purchases. Credit sales. This credit sales is shown on the credit side. Then you get total sales. Total sales. If you observe in the entire problem or in the entire problem, closing stock not given. Closing stock we have to calculate. They said 12.5% is the gross profit on sales. So here sales are 2 crore 91 lakh 36,000. On that you calculate 12.5%, you get gross profit. And observe trade creditors account, debit side, credit side opening balance, debit side cash paid, discount received, closing balance. Difference is nothing but purchases. Difference is nothing but purchases. Observe carefully. Now that purchase amount write down balance sheet, sorry, trading account, debit side. So now observe trading account. Opening balance, purchases, gross profit, minus sales. Nothing but your closing stock. And this closing stock is taken to the assets side of balance sheet. Clear? Now P&L account balance, you get net profit, and this net profit is added to the capital, so that this is the total of balance sheet. Is it clear, students? Next one. Now look at 5A. Messrs. Satyapal Steels were unable to agree the trial balance as on 31st March 2024 and have raised a suspense account for the difference. Next year, the following errors were discovered. Next year means, so we have already discussed trial balance, that means rectification of errors, stage 1, stage 2, stage 3. Now, this is stage 3. Look at stage 3. What is the important point here? Whenever you are rectifying the errors in stage 3, observe if any nominal account is affected, in the place of nominal account, we use profit and loss adjustment account. Profit and loss adjustment account. Repairs made during the year were wrongly debited to the building account 37,500. Repairs made during the year were wrongly debited to the building account 37,500. Now, generally, what is the rectification entry we record? Repairs account debit to building account. But here, repairs account is nominal account, so that we debit a P&L adjustment account. P&L adjustment account debit to building account. Next one. The addition of the freight column in the purchase journal was short by 4,500. Freight column shows debit balance. Normally, what is the entry we record? Freight account debit. It is short na by 4,500. Freight account debit to suspense account. But in the place of freight account, we use P&L adjustment account. Clear, students? Next one. Goods to the value of 3,250 returned by customer Parth had been posted to the debit of Parth and also sales returns. Means generally what is the entry we have to write? Sales returns account to debit to Parth account. But what they did, they posted in Parth account debit side, sales returns account also debit side. Now, how do we rectify it? Observe carefully. Sales returns is P&L adjustment. Na? Now observe. Parth account, normally how much is the amount? 3,250. Earlier Parth account is debit, now we have to credit 3,250. Anyway, Parth account must be credited 3,250. Sales returns earlier debit. Earlier debit. Now it is correct, na? Sales returns correct. So Parth account credit 6,500. Parth account credit 6,500. Remaining P&L adjustment account. Sorry, suspense account. So suspense account debit to Parth account. Sales returns account correctly debited now. Sales returns account correctly debited. So suspense account debit to Parth account. Next. Sundry items of furniture sold for 50,000 had been entered in the sales book. Sundry items of furniture sold for 50,000 had been entered in the sales book, the total of which had been posted to the sales account. Normally, how do we adjust this? Simply sales account debit and furniture account credit. Here sales is nominal account. So what is the entry we record? P&L adjustment account debit to furniture account. Profit and loss adjustment account debit to furniture account. Next one. A bill of exchange received from Comfort and Co. for 60,000 had been returned by the bank as dishonored and had been credited to the bank and debited to bills receivable account. Actually, what is the entry for dishonor of bill? Comfort and Co. account debit to bank. But here, they debited bills receivable account. Na? The adjustment entry is Comfort, rectification entry is Comfort and Co. account debit to bills receivable account. This is simple rectification. Next one. Mr. Sanjay runs a factory which produces tires. Fine. The following details were obtained about his manufacturing expenses. They're asking us to prepare manufacturing account student. Simple, very simple. For the year ended 31st March 2024. Look at, you prepare manufacturing account. Opening work in progress, debit. Closing work in progress, credit. Opening inventory, closing inventory. These two are used in the calculation of raw material consumed. Raw material consumed formula, opening plus purchase minus closing purchases. So by using these three information, we can calculate raw material consumed. Raw material consumed and purchase returns deducted. So four information utilized. So what's the formula? Tell me. Opening plus purchase minus returns minus closing. Simple, students. Next one. Carriage inward, debit. Direct wages, debit. Power and electricity, debit. Repairs and maintenance, debit. Depreciation on factory shed, debit. Depreciation on plant and machinery, debit. Sale of scrap, credit. You are required to prepare manufacturing account. Simple. Observe. Opening inventory, closing inventory. Raw material consumed, 1, 2, 3, 4 information. Next, carriage inward, direct wages. See, next to manufacturing overhead, power, repairs, depreciation, sale of scrap, credit. Difference is nothing but cost of goods produced. This is transferred to the trading account. So this is very simple problem, student. Next one, 5C. 5C and 6A is for company accounts, students. Company accounts. Observe. 5C, 6A. Both are for company accounts. Both are for company accounts. Do them carefully. Next, observe. 5C. The books of Rishabh Limited showed the following balance as on 31st December 2024. Fine. 60,000 equity shares of 10 each, fully paid. 60,000 equity shares of 10 each, fully paid. Okay. 36,000 12% redeemable preference shares of rupees 10 each, fully paid. Fine. 4,000 10% redeemable preference shares of rupees 10 each, 8 paid up. 8 paid up. All the shares issued on 1st April 2024. Here we have two classes of redeemable preference shares. One class 12% dividend, fixed rate of dividend, and the second one 10% fixed rate of dividend. One class of preference shares are fully paid and another class of preference shares are partly paid. Fine. Undistributed reserve and surplus stood as profit and loss account balance, general reserve, securities premium, and capital reserve. Fine. They are giving reserves and surplus. For redemption, 6,000 for redemption. What you are going to redeem? Preference shares. Equity shares are not redeemed now. Preference shares. Here we have 36,000 preference shares. At the same time, 4,000 rupees, 4,000 preference shares. Observe, when you have two classes of shares, we assume that the fully paid preference shares are redeemed. When we have two classes of preference shares, we assume that the fully paid preference shares only redeemed. Fully paid preference shares only redeemed. Is it clear, students? So that 36,000 preference shares into face value 10. Total we are going to redeem 3,60,000 rupees capital. So in this case, what we have to observe is, when you are redeeming 3,60,000 rupees worth of capital, you have to replace the same amount of capital. When you are redeeming 3,60,000 rupees worth of capital, you have to try to replace the same capital either by issuing fresh shares or by transferring the undistributed profits to CRR account. This is the Companies Act provision, student, section 55. Next, look at, for redemption, 6,000 fresh shares 10 each are issued at a 10% premium. Look at, total 3,60,000 rupees we have to redeem capital, minus how many fresh shares you are issuing? 60,000, face value 60. So how much capital is replaced? 60. How much capital we should replace now? 3 lakhs. So 3 lakh, for 3 lakhs rupees you create CRR. This is important point in this problem. At the same time, 12% preference shares are redeemed on 1st January 2024 at a premium of 2 per share. 2 per share. Premium on redemption of preference shares is set off against P&L account balance or general reserve account balance. The whereabouts of holders of 200 shares of 10 each fully paid or not known. Whereabouts of the holders of 200 shares means, see, total we have 36,000 rupees redeemable 36,000 redeemable preference shares. Out of them, a holder who is holding 200 preference shares, we are unable to trace him. So that 36,000 shares minus 200, 35,800 preference shares we redeem. 35,800 preference share holders, we pay the amount to them. Is it clear, students? Next one. A bonus issue of equity share was made at par. We are also issuing bonus shares. 2 shares being issued for every 5 shares held on that date out of the capital redemption reserve account. Is it clear? Generally, bonus shares are issued to whom? Equity shareholders. How many equity shares we have? 60,000 equity shares. First, whenever you are issuing bonus shares, identify how many bonus shares we have to issue. Simple. Number of shares 60,000. Number of existing shares are 60,000 into what is the bonus share ratio? 2 is to 5 means 2 by 5. 60,000 into 2 by 5. Total 24,000 bonus shares we issue. 24,000 bonus shares we issue. So for that, how much amount we need? 10 rupees each share. So 2,40,000 rupees bonus we need. Is it clear, students? Next one. However, equity shares issued for redemption are not eligible for bonus. Equity shares issued for redemption. See, here we have issued fresh equity shares. They are not eligible for redemption. Suppose if they are also eligible for redemption, then total number of existing shares are 66,000. 66,000. Is it clear, students? Yes. Show necessary journal entries to record the transactions. Ignore date column. Yes. Here there are order of recording the entries. First one, it is better to transfer the amount due to preference shareholders. Entry. Preference share capital account debit. Premium on redemption of preference shares account debit to preference shareholders account. This is the first and foremost entry we record. 3,60,000 we have to redeem. On that we are paying 10%. How much? Per share 2 rupees premium. 36,000 shares into 2, 72,000. Total amount payable 4,32,000. After that, arrange sources and follow the Companies Act rules. Here we are issuing new equity shares. Na? Here we are issuing new equity shares. What is the entry we record? Bank account debit 6,000 shares into how much amount we receive? 11 rupee. So 66,000. Out of that 60,000 capital and 6,000 premium. Next, creation of CRR. For how much amount we have to create CRR? 3 lakhs. For creation of CRR, what is the source? First, check general reserve. The amount is not sufficient, check P&L account balance. In this problem, how much general reserve account balance we have? 2,40,000. Utilize 2,40,000 total. Then look at P&L account balance. P&L account balance we have 160. Out of 160, first keep amount for setting off premium on redemption of preference shares. This is important, students. So remaining, look at entry general reserve account debit, profit and loss account debit to capital redemption reserve account. Fine. Next one, capital redemption reserve. Yeah. Now amount paid to preference shareholders. On how many shares we are paying amount? Tell me. 35,800 preference shares holders we are paying amount. So preference share capital account debit to bank. After that, bonus issue procedure. What is the first? Calculate bonus. How much amount we have to pay? 2,40,000 rupees. What is the source? We have CRR. How much amount we have in CRR? 2,40,000. The total, sorry, just a minute. CRR we have balance of 3 lakhs. Out of 3 lakhs we use 2,40,000 rupees. For that, what is the entry we record? Bonus, capital redemption reserve account debit to bonus to shareholders 2,40,000. Now issue bonus shares. Bonus to shareholders account debit to equity share capital 2,40,000. Now we have 72,000 rupees premium paid. It is loss na set off against P&L account balance. So profit and loss account debit to premium on redemption of preference shares 72,000. This is the problem, student. So we are expecting for January 2025, we are expecting a question from redemption of preference shares. So be careful, students. In case of redemption of preference shares, two things are very important. One, capital replacement. Second, sources for redemption of preference shares. That means how you are collecting cash. We check on one hand capital replacement, on the other hand for redemption we need a fund na cash balance also we have to see, at the same time capital replacement also we have to check. Is it clear, students? These are calculations, you can check it. Now come to 6A. Samuel Limited issued a prospectus inviting applications for 1,20,000 equity shares of rupees 10 each at a premium of 2 per share, payable as follows. Total amount receivable 12 rupee. How we are receiving this? That 12 rupees, 3 per share on application, 5 per share on Allotment 5 rupees includes premium and 4. How many installments we are receiving the amount? In 3 installments. Applications were received for 3,60,000 rupees, 3,60,000 shares. We have issued only 1,20,000, but we received 3,60,000. Oversubscription, equity shares. Applications for 80,000 shares were rejected. See, 3,60,000 minus 80,000. So 2,60,000 remaining. Sorry, 2,80,000 remaining. So 80,000 shares amount we are refunding. And remaining 2,80,000 shares we have. What we do with that 2,80,000 shares amount? And the money refunded. Fine. Shares allotted to remaining applicants as follows. Look at. Now we have total 2,80,000 applications. Category 1 and 2. Number of shares applied 1,60,000 and 1,20,000. Total number of shares 2,80,000. Applied now. To them, generally we allotted only 80,000 and 20. Check. Total not exceeding 1,20,000. Fine. That's it. We have excess money now. Here we have 80,000 shares excess money. 160 minus 80. 80,000 shares excess money. At the same time, 1,20,000 minus 40,000. 80,000 shares excess money. Total we have 80 plus 80. 160. Total we have 1,60,000 shares excess money. Total we have 1,60,000 shares excess money, students. Observe carefully. Now what we do with that excess money? Excess money received with applications was adjusted towards sums due on allotment and the balance amount returned to the applicants. So after adjusting for allotment, whatever the excess amount we have, that amount we refund now. Next, all calls were made duly received except the final call by a shareholder belonging to a category 1 who has applied for 680 shares. We have received total amount, means allotment amount, final call amount, total amount received, but except on a shareholder who belongs to category 1 on how many shares? 680 shares. He has applied for 680. But how many shares we allotted? We have to calculate. His shares were forfeited. Fine. So this is a problem of issue of shares, forfeiture of shares, and the forfeited shares are reissued, reissue of shares. 13 per share fully paid up. Pass necessary journal entries for the above transactions in the books of Samuel Limited. Open calls in arrears account whenever required. In marks, students. June 2024. 6A is given for 15 marks. September 2024, they have given for 15 marks. Now also they are giving for 15 marks. Remaining questions, look at. Write short notes on any two of the following. Here they are giving again alternatives. Internal option. Bills of exchange and various parties to it. Retirement of bills of exchange. What are the advantages of subsidiary books? It is better to write subsidiary books so that you can score easily 5 marks. Now we see the last question. How many installments we have? 3 installments. 3 installments means 3 into 2, 6 entries we have to write for issue of shares. Per feature, 1 entry. Reissue, 2 entries. When you reissue, we get money, 1 entry. Plus, after reissue, we check profit. On reissue, that profit is transferred to capital reserve. Yes or no, students? Yes. Observe clear. Here the important calculation is working note. This is very, very important, student. So look at, students, this working note is very important. Calculation for adjustment and refund. First look at the columns here. First category. How many categories we have? 2 categories. And rejected also 1 category they are giving. Next, number of shares applied. First category 160, second category 120. And how many shares we rejected? 80. Next, number of shares allotted. Number of shares allotted. Rejected, anyway, we didn't allot anything. First category 80, second category 40. Next, amount received on application. How much amount we receive on 80,000 rupees? 3 rupees. 80,000 shares? 3 rupees. 160,000 shares? 480. 1,20,000 shares? 10,80. Here they are giving, get calculations also. Here, next one. Amount required on application. That means second column into application money. In any way, rejected shares, we didn't allot anything. Next, 80,000 into 3, 240, 40,000 into 3, 1,20,000. Total, 3,60,000. Amount adjusted on allotment. See, how much excess amount we have? For first category, we have 4,80,000 minus 2,40,000. 2,40,000 we are adjusting for allotment. Next category, we have 3,60,000 we received, whereas sent to capital account 1,20,000. Excess money we have 2,40,000 excess money we have. But from this category people, we have to receive originally how much? 40,000 into 5, 2 lakhs rupees we have to receive. On allotment, we have to receive only 2 lakhs. But we have excess of 2,40,000 na. So out of 2,40,000, 2 lakhs is adjusted and 40,000 is refunded. 40,000 refund. This calculation important. Total how much amount we are refunding? 2,80,000. Amount due on allotment. First category, 80,000 shares. 80,000 shares into 5, 4 lakhs. Second category, 40,000 shares into 5, 2 lakhs. Total receivable 6 lakhs. Already adjusted how much? 4 lakh 40. Remaining amount we receive 1 lakh 60. For the whole problem, this working note plays an important role. Clear students? Yes. Entries are easy students. Entries are easy. To get one by one entry. On receipt of application money, bank account debit to equity share capital. Next, transferring application money to capital. So, for equity share application account debit 10 lakh 80 to equity share capital to equity share allotment to bank. Next one, allotment amount due. What is the entry we record? Equity share allotment account debit to equity share capital account to securities premium account. Here you can write 1,20,000 into premium is 2 rupees na 2,40,000. Capital 3,60,000. Next, bank account debit to equity share allotment. How much amount we receive? 1,60,000. This is also as per table calculated. Next, final call due. Equity share final call account debit to equity share capital account. Next, final call received. On final call, on how many shares we didn't receive money? See, a shareholder to whom 680 shares applied from category 1. First, calculate pro rata of ratio of first category. So that is nothing but 1 by 2. That means 2 shares applied and we allotted 1 share. So here he applied for, so when he applied 2 shares, we are giving 1 share, category 1. Now he is applying 680 shares, then how many shares we allot? 680 divided by 2, 340 shares we allot. Excuse me. That means we have not received final call amount on 340 shares. We have not received final call amount on 340 shares, students. Observe carefully. Calls in arrears, 340 shares into, what is the amount due? 4 per share. 1360. Is it clear? Remaining amount we have received. Now what we do? We forfeit these 340 shares. Journal entry. Very, very important entry, students. Forfeit entry. Equity share capital account debit to calls in arrears to forfeited shares account. Anybody can write the entry, but write down the amount. How many shares forfeited? 340. What is a full called up amount? Called up value per share 10 rupees. Total 3,400. Out of that, how much amount we have not received? 1360. Remaining amount we received now transfer to forfeited shares account. Now these shares we have issued at what price? Look at these shares we have issued at 13 rupees. Issued at premium entry. 340 shares into 13 rupees bank account debit. 340 shares into 13. 4,420 to equity share capital 340 into 10. Three 40 into 10, 3,400. Securities premium 1020. Now if you observe, forfeited shares account we have 2,040 rupees balance. On reissue, we don't have any loss. We have issued reissued shares at premium, so that the total amount in forfeited shares account is transferred to capital reserve. Yes or no, students? Yes. Observe carefully. That's it. Is our problem, student. But solving the same problem in the examination condition takes some time. Yes or no? So you have to practice very well. That's it. This is our MTP series 2 January 2025 attempt, students. That's it. We again meet in a new video. Till then, bye bye everyone. But try to solve MTP 2 series 2, students, because it contains very lengthy problems and important conceptual problems, students. Don't ignore this MTP 2. Is it clear? Yes. So that's it for this video. We meet again in the next video. Till then, bye bye everyone.